Investing your money for the first time can feel overwhelming, right? Maybe you're wondering where to even start or worried you'll make mistakes and lose it all. Trust me, I've been there. But here's the good news. You don't need to be an expert to start building wealth. In today's video, I'm going to break it all down step by step. We'll cover where to invest, how to avoid beginner mistakes, and strategies to make your money work for you, even if you're starting with just a few bucks. By the end, you'll have the confidence to take that crucial first step toward financial freedom. So, grab a notebook, hit that like button, and let's dive in. First, start by setting clear goals. Before you invest a single dollar, the first step is understanding your goals. What are you investing for? Is it to buy a house in 5 years, retire early, or maybe just build a safety net? Here's why this is so important. Different goals require different types of investments. For example, if you're saving for something short-term, like a vacation in the next year, investing in stocks might not be ideal because they can be unpredictable in the short run. On the other hand, if you're thinking long-term, stocks and index funds might be exactly what you need to build serious wealth. A simple tip? Write down your goals and assign a timeline to each. Knowing your destination makes it way easier to choose the right investment vehicle. Now, understand your risk tolerance. Here's a question for you. How comfortable are you with the idea of seeing your investments lose value temporarily? This is what we call your risk tolerance, and it plays a huge role in deciding where to put your money. If the thought of your investment dropping by 20% overnight keeps you awake at night, you might want to stick with safer options like bonds or high-yield savings accounts. But if you're willing to handle some bumps in the road for the chance at higher returns, stocks and ETFs could be great choices. A practical approach for beginners is to start with a balanced strategy, maybe 70% in stocks and 30% in safer investments like bonds. As you gain more experience and confidence, you can adjust this ratio based on your goals and comfort level. Remember, it's not about being fearless, but about finding the balance that works for you. Time to start small and stay consistent. One of the biggest myths about investing is that you need a ton of money to get started. That's just not true. In fact, many successful investors started small and simply stayed consistent over time. Thanks to modern investment platforms, you can begin with as little as $5 or $10. Apps like Robinhood, Acorns, and Wealthsimple, for Canadians, let you invest in fractional shares, meaning you don't have to buy a full share of an expensive stock like Amazon or Tesla. The key is consistency. Even if it's just $20 a week, those small amounts add up over time thanks to the power of compound interest. Imagine this as planting a tree. It might look tiny at first, but with patience and regular care, it grows into something massive. Diversify to minimize risk. Here's one of the golden rules of investing. Never put all your eggs in one basket. Why? Because no single investment is guaranteed to perform well all the time. Think of diversification like building a strong team. You wouldn't want a soccer team made up of only goalkeepers, right? You need different players with unique skills to win the game. In investing, that means spreading your money across different types of assets like stocks, bonds, real estate, and even index funds. For beginners, index funds and ETFs are a fantastic way to diversify instantly. Instead of buying shares in just one company, these funds let you own a tiny piece of hundreds or even thousands of companies. That way, if one company struggles, it won't drag down your entire investment. Remember, keep learning and avoid emotional decisions. Let's be real. Investing can mess with your emotions. When markets go up, you feel like a genius. When they crash, panic kicks in, and you might feel like pulling all your money out. But here's the thing. Successful investors don't let emotions dictate their decisions. They stay calm, trust their strategy, and keep investing consistently through both good times and bad. A pro tip? Keep educating yourself. Read books like The Intelligent Investor by Benjamin Graham or Common Stocks and Uncommon Profits by Philip Fisher. Follow trustworthy financial news sources and listen to podcasts that help you grow your knowledge over time. The more you know, the less likely you are to make impulsive decisions based on fear or hype. Take that first step today. Here's the truth. You'll never feel 100% ready to invest, and that's okay. The most important thing is simply to start. Set clear goals, understand your risk tolerance, start small, diversify, and keep learning. Remember, every successful investor was once a beginner just like you. What made the difference? They took action even when it felt scary or uncertain. So, what's your next move? Open that investment account. Put your first $10 to work. Begin the journey toward financial growth today. And if you found this video helpful, don't forget to like, subscribe, and share it with someone who needs this information. Let's grow together and keep building your path to financial success.